Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
We are going to do an update to Las Vegas real estate market. It's pretty exciting. If you're a seller, again, imagine that. If you're a buyer, not so much.
You know, if you're a buyer, there are opportunities like there are in every market.
Okay, we're just going to jump right in here. We're going to start hitting the stats, and we'll talk about what's going on exactly here. Start with median list price. Friday, December 15th, the median list price, this was for everything in the MLS, was $530. Today, it's $560. Okay, so that's pretty substantial change, $30,000. Now, list prices, of course, anyone can list for whatever they want, right?
Right.
All right. The thing that a lot of people have kind of noticed here is this median price of new listings. To an uneducated person, this would seem as the market's falling because you have, if homes are $560, but new listings are $42, does it mean home prices have fallen $80,000? Because that's what Reventure and all the Crash Bros would do a video, and they would show this and say, see, this shows that Las Vegas is in a bust and the home prices have fallen $80,000, right? But that's not really accurate. What is the difference between median list price and median price of new listings?
So you've got a couple different things going on. You've got the median list price, which is considering everything coming on the market. New listings are a different ballgame. This is what's coming on the market. But remember, the difference between them is the homes that are turning, right? So the homes that are on the upper end are turning slower than the homes on the lower end. So that's where you have your discrepancy.
Yeah, because remember that you may only get 25 homes come in the top quarter of prices, but then you may have 125 homes sell in the bottom quarter of prices. So you have more churn in there. So new listings that are coming on, if they're, you're going to have 5 times as many new listings in lower price ranges as high. And then the higher price ones stay on the market. So that's the reason for discrepancy on that. So don't read anything into that other than price per square foot, which is the most important thing. Oana, price per square foot. Friday, December 22nd, it was $258 average for all homes in Vegas for sales. It's now $268. It's $10 a foot. You're saying, oh, but that's not that much. $10 per square foot, a 2,000 square foot house is $20,000 sold for, $20,000 more than it did in December. Why is price per? This is actually pretty accurate.
Right. So price per square foot is really good indication because it helps you kind of figure out home values across the valley, right? Versus just going, well, that house next door sold for this, and my house then must mean it's going to sell for whatever. But this way it gives you an idea of what's happening across the valley, and it gives you an idea of trends too. So the trend obviously is that prices are going up.
Yeah, so say you have a neighborhood where all the homes are 4,000 square feet and they're $800,000. And then all of a sudden you look and notice this house comes on the market for 500,000, or say 500,000. You're like, oh my gosh, home prices have just fallen from 800 to 500 because that one house. Well, but that's a 2,500 square foot house, smaller home. So you use this price per square foot as a better gauge of where everything's sort of headed.
Right.
That's pretty substantial.
It is.
$10 a square foot, 2 months. I mean, that's not going to stay. That would be $60 a square foot. That would be like 30% price appreciation in a year.
Right. And we've talked about this before. We have talked about a market correction. The question is when and off what number. While we don't see that coming up anytime soon, simply because of the low inventory levels, it will at some point, happen. Again, you have to have a lot of different things happen. So right now with the low inventory, with overall market stability, with good employment numbers, overall good economic numbers, that's not likely in the immediate future.
Yeah. Las Vegas leads the nation in job growth. We have the highest job growth in the nation. We're number one for job growth. We also are not building enough homes.
Correct.
For what the market needs. Okay. Here is the inventory number. Friday, December 1st, there were 2,600 houses. Now, this is just single-family homes in Vegas, okay? And now there's 2,100, so there's 500 less, which means homes have come on the markets, homes have been sold, but 500 more have been sold than have come on the market.
Right.
In the last 2 months basically.
Right.
That's
So again,
pretty substantial.
that speaks to that whole inventory issue that we've been basically beating to death for over a year.
The very last one, that market action, 42 is the hottest the market's been in over a year. So it's pretty hot. It's hotter than it was last spring. I got some more charts to show you here. We'll just do price per square foot. This is like a 5-year look back. The dot is every year for the last 5 years. And on the far left side, there's no dot there, but that's today. The edge is today, okay? You could clearly see price per square foot, home prices in Vegas, are the highest they've ever been, including this time last year, this time in 2022, and this time in 2021. Now remember, this time 2022, home prices started going up because people knew interest rates were going to start going up. So people flooded in the market to buy. They were like, I just need to get something, right?
Right.
So we have the highest home prices that we've ever had for, basically mid-February, right?
Right.
You're saying there's going to be a correction, but it looks like we might have had a correction from 2022 to 23 where, they softened up a little bit, just a few percent. And this chart is misleading because the bottom of this isn't $0, it's 150. So in price per square foot in total dollars, that's like 7% change.
Right. So look, the corrections happen. They're cyclical, right?
Yeah.
It's not that it won't happen. It's a matter of when. I just don't feel that at this point we're anywhere near it.
Okay. Yeah, I agree too. Inventory. This is another interesting chart. This should be a very happy sine wave. Inventory should look very happy and normal. If you had shown this to somebody in 2019 and said, this is going to be the next few years, they would have been like, what? Because if you go all the way back to the left, that's the last sort of normal market we have. It would just kind of go up and down and up and down. And then it just went down, down, down. The inventory went away. And then it started to get back to normal level. And then it tanked again. So that where it looks like it's high inventory there in the fall of 2022 is actually not high at all. It's super normal. That's like a normal, healthy market. But then... And bottom line is, if you see inventory around that level, that's the normal 3 to 4% home price appreciation in Vegas that we had every year. Anything below that, homes are going to probably go up in value faster.
Right.
And then, but you have to be substantially above this. Remember, the housing crash, we had 26,000 houses in the MLS total. And remember, the town was, probably 30% smaller. So today we'd have to have 40,000 houses. You saw we just had 2,200 in Vegas. So the whole MLS probably has 5,000. So we'd have to have 8 times more homes that we have on the market for it to really have a big impact, right?
Right.
And that doesn't really look like it's happening because, we don't have the same market that we had back then. What's different now versus in the past?
Well, we have just so many... we have more people, less homes. We have more people with favorable interest rates that don't want to let go of them.
Yep.
There's just a whole different market dynamic than we had then. And of course, Vegas is in an economic cycle right now where we're growing by leaps and bounds. So there's just a lot going on.
Yeah, we're in this we're probably at the beginning of a multi-year economic expansion that started right after the pandemic. And we've been the recipient of a lot of the work from home, people coming from California. The exodus of California has helped us quite a bit. But I want to put something in perspective for everybody. There's only nationwide of all mortgage holders, okay? Now, these are mortgage holders. Only 2 or 3% of all people with home loans have loans over 7%, okay? In 2006, it was 100%. Like you probably didn't have, if you had a rate that was like under 7, it was one of those introductory 6-month rates that went up to 8. It adjusted up to 8. Interest rates were substantially higher back then. You had far less people that own homes. So when home values started to drop, people just said, forget it, I'm not paying these high interest rates. It's the opposite now. We don't have people paying high interest rates. Just because the going rate today, if you were to get a mortgage is 6.6%, doesn't mean everybody else who has a house is magically paying that. This isn't like a car or credit card.
Right.
So what does that mean for those people that have, 2.9% or 1.9 or whatever interest rate.
Right. So those people are unlikely to want to shed those interest rates. So they will probably hang on to those homes, whatever they wish to do with them, whether it's continue to live in them or use them as part of their investment portfolio and rent them out once they find another home to relocate to. So for the time being, we're still looking at this inventory crunch that is not likely to get better anytime soon. And that's going to, at the very least, support prices. But as we're looking at these numbers, we're looking at prices actually going up.
If you're going to buy a house now versus May versus next fall, what does your gut tell you?
Find the right house and kind of hold your breath and jump.
Okay. All right. Anything else?
That's it. Hope
right.
you had a good time with the market update. Hope you enjoyed it. Please remember to like the video, subscribe, hit the notification bell, share your real estate related comments. Even if they're from the Crash Bros, that's okay. Bring it on.
I know that we watched one of the Crash Bro videos, and it was he doesn't even understand the Vegas market, and he's trying to, make these, it'd be like these comparisons we showed with the list prices.
So for a moment, consider that the fact that he was here over the Super Bowl and that he made this a tax-deductible trip by being here and shooting a quick little video in Vegas. So consider the whole picture regarding the video. So please, just consider that. Okay. Anyway, hope you had a good time with our video. We appreciate you watching. Subscribe, hit the notification bell, share the video, like the video, and leave us your real estate related comments. See you on the next video. Bye.
Bye.